what's happening right now in the markets is the creation of a bubble. And it is going to be the generative AI bubble. And in this episode, I want to talk about this. Of course, we're invested, so it's going to affect our portfolio. I think this is also a good episode for people to go back to in 6 to 12 months and see if my hypothesis was correct. It's testable, which is the beauty of financial markets, that we have data, we can test hypotheses, and this is one of them. So what am I saying here? Now, I want to discuss sort of the anatomy of a bubble. And by the way, bubble has a bit of a negative connotation. It's not necessarily bad, you know. Investors, big hedge fund investors, famous people that have made money in the markets, they've said in books and anecdotally that one of the ways to create wealth is actually to participate in big structural swings of the market, which is what bubbles are. You know, bubbles are the common English anecdotal use of bubble is sort of the tail end of the bubble when it starts bursting. But you can make money all the way on the way up, and you can even survive after it bursts if you do the right thing. I'm going to discuss all these things, but that's not the conversation in this episode is not about warning of a bubble. In fact, it's the opposite. It is the beginning of a bubble, which is the time you want to be invested. And you know, we can worry about the bursting and how to survive that later. I think this is much more about, okay, what is a bubble? How does it happen? And it happens with names. Okay, once you name something, then people know how to look at the world, and they're going to look at future data differently. This is the key. So once you put a name on things, generative AI, for example, then the future of businesses, science, technology transfer, VC investing, the whole ecosystem will judge future investments very differently. And most importantly, also customers, investments, CapEx, and that's how economic growth happens. And that's what bubbles do, because humans, even the market, even the wisdom of the crowd, nobody can assess exactly when to stop. You know, is Nvidia at $1 trillion fairly valued today, or at 5 trillion? It's hard to say, because you don't know what the future cash flows of Nvidia will be, or for that matter, 200 billion. I mean, it could also be down 80% from here. Who knows? The point, what I'm trying to make here is that you don't know what the future cash flows discounted today are. It's impossible to know that. And people who claim that they can do that, such as Warren Buffett, are selling snake oil. You can't do that. However, the job of an investor is not to calculate the present value of a company or something like that. The job of an investor is very similar to the job of a big wave surfer, which is the wave, I don't catch the wave catches me. In other words, you have to be prepared every day, prepare yourself through your work to be ready to be caught by the wave, and then surf that wave properly and make sure when you land, when it crashes, that you can still stand up and surf again. This is the job of an investor. I'm going to elaborate a little bit more, but again, the really what I want to bring home in this episode is the anatomy of a wave, of an investment wave, like, for example, what's happening right now with generative AI. And it starts with the name. This is the Not Even Wrong podcast. It's June 3rd, 2023. This is Krim Delco. Since the last update, we're up 12%. The market is up 2%. For the year, we're up 80.8%. The market is up 11.5%. We're outperforming by 69.3%. We are driven by exactly this wave, this creation of an investment cycle, or if you want, a bubble. I'm not going to use the word bubble anymore because, again, it has a negative connotation and it's the wrong word right now. What the right word is wave. It is structural shift in investment, starting with Wall Street, but then going down to the actual IT professional who's going to invest in future infrastructure. That's how this cycle starts. We've been there before. Silicon Valley has done this many times, actually, in the past 30, 40, 50 years. So this is not new. I think what's important for us is to understand this. And of course, also we have to discuss it within the context of Tesla. This is very, very important. And here's why. Because Tesla is going to be affected by this in many ways, and we have to understand that because it's our largest investment. So let's start with the beginning. So generative AI is a name. We have a name now for something that is fairly complex, right? There is something called machine learning, which is based on, let's call it, certain types of statistical algorithms that run based on data that comes in and then is able to do predictions. So what's in science is called autoregressive models. So you look at the past and you learn from the past and you predict the future. This is sort of where AI lives today. What large language models have done, LLMs, they have gone a step further. In a sense, they have taken massive amounts of text and they have learned a bunch of relationships between words, and they've become very good at predicting the next word based on that. And therefore, they're able to have decent conversations about cognitive topics with humans. Are they passing the Turing test or not is not the crucial question here. In my point of view, they are, but some people might say no, and so on and so forth. But that's, I would say, at this point, an academic problem. It's not practical. What's practical is that we have use cases now, real use cases for generative AI. For example, you can use ChatGPT or BERT or any of the other front ends, or if you will, products which are built on general pre-trained transformers, which GPT stands for. And you can, for example, ask the transformer, how was Richard Feynman's book, Surely You're Joking, Mr. Feynman, influenced? How has it influenced a generation of physics students? You can ask a question like that, and you will get a decent answer. You won't get the truth, but you will get good answers. So a lot of cognitive tasks can be done. Should I drink organic beer or not? What are the pros and cons? What is Python? For example, just an example I did yesterday. I was looking into something called auto conditioning, I believe. Auto conditioning. It's when programs optimize themselves automatically for the hardware that they're running on. So there's a word, I think it's auto conditioning maybe. So I looked at that. I looked it up. I looked at the pros and cons, which is a very good use from my perspective always. What are the pros and cons? Why would we use different size of? Why would we use? What's the word size of a processor? And why do we use a larger word or shorter word? Things along those lines. You can definitely have a conversation. Because then you can go further, which is not exactly what you can do with Google. So anyway, there's a lot of good use here. Let's leave it at that. And this episode is not about the pros and cons of generative AI. It is about naming the subject, because once you name something, the future information that comes to our minds is going to be calibrated differently. This is the key, because now I'm looking at generative AI. Tomorrow, I'm going to read the earnings report of company XYZ, and they're going to explain to me why they're well positioned to take advantage of generative AI. So I'm going to buy their stock. And then the day after tomorrow, I'm going to test that hypothesis. In other words, I'm going to look at their next earnings report, and I'm going to hopefully see some traction in the sales of a certain product which is supposed to take advantage of generative AI, and so on and so forth. I have something to work with, and investors are not just love this kind of stuff. This is what investors do. This is what investors do. This is not exactly what we are doing at Orange Capital Partners. And part of this episode is to try to calibrate the difference, because we're not jumping on this bandwagon now. We've been there way before. And the point, the wave catches me, I am not catching the wave, is fundamentally crucial here. What's the difference? Well, I've been working on this years ago. I've started working, I would say, my first course in AI. I've done some stuff in college, but after me and my partner Zobinar started Orange Capital Partners, We really weren't technology investors or anything like that. We were what's called special situations managers. We were looking at things like mergers and acquisitions, restructuring, spin-offs, things along those lines. We were using options to try to take advantage of uncertainty in situations like that, which was for a while a very good money-making field. I believe it started becoming more difficult for two reasons. One is it became competitive. Lots of other hedge funds smelt the money and jumped on it. And more importantly, after 2008, which is exactly when we started, the Federal Reserve started printing money, QE1, 2, 3, and so forth, and therefore made it very difficult to make money with shorts. Not that it's impossible, but it is just very difficult. It was difficult. It is different today. I'm not discouraging people to take short positions anymore, because actually there are good reasons to do that. But anyway, we had to change our strategy. So over the years, we became what we are today, which is a wealth creation hedge fund, not an investment company. That's very, very different. We are waiting for the wave to catch us. We are not trying to catch the wave. So this is the real difference. And now what does that actually mean? It means that you prepare yourself for the most likely scenario in where a field can become a wealth creating wave, or a wealth creating structural flow of money and investment that ends up creating wealth. How do you do that? Well, that's obviously, if I could just summarize this in a paragraph, then maybe I wouldn't have a job, because then it would be easy to replicate. It's definitely a difficult job to do, but I think some of the ingredients are that you have to find your own names before the market does it. So this is, if you will, some sort of trying to find the true names. Okay, the true names of things. Okay, so there was this thing AI, right? Artificial intelligence, and it was floating around. It started floating around definitely in 2012 with the ImageNet moment. The problem was finding the true name. In other words, what is the true essence of this field? Because once you understand it, you will understand how to make money. And the true essence of the first wave of AI was linear algebra and matrix algebra used for particular types of algorithms that were really good at predicting certain things, such as, for example, pictures, naming pictures, and then over the years, computer vision. So this helped us understand the computer vision approach of Tesla in full self-driving, and it also helped us understand why NVIDIA is such an interesting company. There's other things you can do. That's how it was for us. Those are the two largest positions we have today. We had some issues with NVIDIA. We solved them. We are now very happy investors. But fundamentally, that's what you do. You try to understand what is the true essence of the thing, and then you invest and then hope or wait until the wave catches you. And if you're wrong, like for example with CRISPR, we did the same thing and we got out. We sold everything because we believe we're wrong. And I can maybe discuss this at the end of this episode, or do another episode about how you know when the wave ain't going to catch you anytime soon. This is a very important question, because you don't want to sit there. You only have one lifetime, one career. You can't, at least for now, sit there for 100 years and wait until things happen, right? So there's a certain constraint, which is time for anybody, and it's defined by your lifespan, right? I mean, you just can't wait for too long. Long term is fine, but what does long term mean? It means 10, 20 years. It doesn't mean 100 years. So back to the key, of course, is to name it, right? Now we are at another cusp of a new wave of investment, and it starts with the name generative AI. Generative AI, to use the words of Andrej Karpathy, is all memory and not all retrieval anymore. So this is the key. Retrieval is what Google is, and Google is arguably the first real AI company. Google retrieves existing documents. That's what Bing does, that's what Google does, that's what Baidu does, and all the other search engines in the world. They won the internet, and for 20 years dominated the internet. What memory only means is that now You don't retrieve documents. You learn from the documents and you store that knowledge, and then you can retrieve it, you can reproduce it in a generative way. That means more like a human, where you have a certain knowledge and then you produce it in your own language when asked. You don't produce a document. If I'm asked, what was the contribution of Richard Feynman to physics? I don't produce a paper. I kind of formulate. Richard Feynman was doing, in particular, I would say, inspired people with his interesting intellect. That's really his main contribution. He had some scientific contributions, but I think they're fading next to the importance that he had as a human being and as an inspiring person. So he was more like a, like a Picasso or a Mozart or maybe an Elon Musk, along those lines, a personality that transcended his own field, but then also made the field interesting. Yeah, Elon Musk is a good example, actually, because then people want to study condensed matter physics now because they want to work for Elon Musk. That's how you transcend the field. Now back to the name. The name generative AI means more memory, less retrieval. You can find somewhere in the middle. I think a lot of chat engines today work some between those two things. But the point, of course, this is definitely a step change in the way we do artificial intelligence, in the way we solve cognitive tasks, which is the ultimate purpose of artificial intelligence, solving cognitive tasks. Some of them, like driving, are maybe more reptile brain type stuff, and some might become much more sort of the kind of stuff that we consider cognitive excellence, solving math problems, and so on and so forth. Once you put the name out there, people can then reference the future information based on that name. This is framing. This, in psychology, that's called framing. This is how investment waves start. This is how bubbles get created. Now, to finish this episode again, I think I just want to say a few words about the bubble itself, okay? First, again, I hope people are not misled by my use of words here, because the bubble doesn't mean you should get out now. It just means that, listen, the wave is going to come. Investment managers will try to catch that wave. For us, we are being caught by the wave, which is a much better position to be in. You're much earlier, but you can also ride the wave much better. And you will be able to make a lot more money with it because you have the right positioning. This is key. It doesn't make a lot of sense to do all this work and then have a 1% position and spread our money in all different types of fields, hoping that waves catch there also. That is not a good example of how one should create wealth. Just because the market's too competitive, you're not going to get that many chances, and it takes it's usually very quick in terms of sort of the ups and downs. But when you're on the right path, you should have a large position, because that's when you create the wealth. Now, again, how is the bubble going to be created? Well, the bubble, you see, bubble has a negative connotation, but it's not necessarily a bad thing. It just means that, for example, let's discuss Tesla now. How is Tesla going to be affected by generative AI? Well, there are certain things that Tesla could do. For example, use large language models, train them on Dojo, and then see how they can improve their full self-driving stack. They could also maybe become a good place to train video data and have sort of large language video models, okay? LLVs, large video models, LVMs instead of LLMs, LVMs. This is the next step. Maybe Tesla could be a massive player in that field, and then with large video models, we could have all kinds of new interesting learnings that we can base on that and product. So generative AI based on video and photo, let's say video, can have very different applications. One of them, for example, full self-driving. So you see that there's a lot of potential here, and that's why the stock will start going up, because people will start buying into this potential, okay? LVMs, large video models, for example, where Tesla is a big player. Now, there's going to be a time when the show me the money time comes, which is, okay, now I've bid up your stock from 10 times to 20 times sales, but now you have to start showing something. When that time comes is difficult to say. is influenced by other factors such as macro, but it's going to come. And as an investor, you have to understand that, but you see, once you have, now you have the names, large video models, are they doing it? Yes, they are actually. In fact, they are hiring people to do exactly that for Dojo. We just saw a job ad recently, and the investors, the really good Tesla investors, are already picking on that. Shout out to Rob Maurer in this one. So definitely, you see, now you know what to look for. And when you see it, you can buy more stock or just be comfortable with your position, doesn't matter. But there will be a show me the money moment. And there's a good chance that Tesla will show and then the stock will keep rallying, or it could go the other way. Now, as an investor, just to finish this episode, of course, we always say the key to everything is leverage, because if you don't have leverage, then it's fine. You really have a lot of time, but you always have leverage as an investor. By the way, leverage is not just borrowing money in your account. Leverage also means, your lifetime. You have expenses, you have age, you have kids to raise. There's a lot of commitments you have. So you do always have some sort of leverage, and you want to make sure that you can always fund your life, fund your lifestyle, invest in your life, be it for your kids' college, which is a true investment, but also take a trip to China, which is an investment. For us, our family, the way we look at our life, and that's what business owners, in my opinion, should be doing, there is no differentiation between the business and the life. It's the same thing. We live our lives the way we run our business, and we run our business the way we live our lives. Okay, we have to be frugal to the point where we can sustain ourselves against difficult situations, volatility, and those sort of things. But also, of course, we need to keep investing, like every other business, in particular in knowledge creation. We need to keep investing in things along the lines of, sometimes maybe just do a random trip like to China or Iceland or whatever. I've spoken about this in the past. I don't want to use more of time for that here, but what is a good investment for a person in the hedge fund business? That in itself is worth a couple of episodes. But again, you have to keep investing. That's the key. So to summarize, we are at the cusp of a new investment cycle, of a new investment wave or bubble, if you want, and it's called generative AI. It's going to create a lot of interest, it's going to create a lot of follow-up. People will try to catch that wave. Once you have a name, people know what to reference for, and they will look at future information based on the reference. Based on that name, they will create new names, like large video models, LVMs will come at some point, and so on and so forth. So we will have this cycle now rolling and growing, and that's a good thing. That's how investment cycles happen. That's how progress happens. That's what progress is. There is something here. This is not just words. And that something will create real products and services and real technologies. And we have a name for this now. So as humans, we can act as investors. We can invest capital in this space. Thank you.